Hi, welcome back to FutureFast, and we have one of the very interesting personality in the blockchain space. But of course, she has a history of a lot of activities in the financial space. But before I get on to bringing Loretta to the conversation, for those of you who are here for the first time, this is an effort to bring in people like Loretta who are doing things and which are bound to have an impact on the future. And the idea of these conversations is that can we draw some pointers that we could potentially use it in our own business or life. So with that, I hope you're enjoying our conversations and podcasts, and I'm sure you will enjoy this as well. And Loretta, thank you so much for making time to do this. And despite your hectic schedule, just as a start, I'm just curious, how many days in a month do you travel?
Thank you for having me. It depends month to month. I mean, I think last month I was in the air for 99 hours in the month, and I think that's more than any pilot flies. So far this month, it's been a lot. I think it's up to about 77, and the month is only halfway through. And I promised myself and my daughter I wouldn't travel for the next 2 weeks, but that may change in the next 24 hours. I might find myself in India next week. So, so who knows? So a lot.
Well, for the audience and listeners, she practically works across all the time zones and pretty much all the continents. And I hope you'll draw some things out of our conversation. So, Loretta, can you share your journey with us?
So my journey is a very long one. I'm not young. I often refer to myself as being probably one of the oldest people in blockchain, other than Satoshi Nakamoto and the cyberpunks who probably started the crypto movement in the 1960s, and Bob Kahn, who built the internet in 1973. So I'm up there. My life journey started actually as a derivatives trader. I started trading derivatives on a trading floor, which involved no mobile phones, no computers, just hands and pieces of paper and lots of yelling and shouting in 1991. So I was a derivatives trader for over 30 years. I've traded every asset class that there is, whether that be commodities, fixed income products, equities, water entitlements, actually, one of the weirder things I've traded, and electricity. So I have a very long history in financial markets. I've run at a management level and a board level a number of banks. So I actually lived in India for almost 8 years. So I ran 2 banks in India and worked and ran capital markets for an investment bank. I came back to Australia in 2012 because I had a little girl who's blonde, whose first word was actually in Hindi, not English, and she's blonde and very blue-eyed. So I brought her back to Australia in 2012, and I was planning on retiring from financial markets because derivatives is quite an intense financial product, and financial markets is really hard, and especially for me because I was one of the very few women in financial markets. And I think to even this day, I'm probably one of the very few women that's been a managing director of a derivatives business for global investment banks. So I've worked for most of the big investment banks. I'd had enough by the beginning of the 2012. And it was interesting. I remember one of my IT specialists, one of my IT staff in India in 2010, in my back office in Bangalore, I was running RBS, said to me one day, "Madam, have you looked at Bitcoin?" And I said, "I don't know what Bitcoin is." So he showed me and he said, "You should look at this. It's going to be very interesting." And I sort of brushed it off. And then I came back to Australia, and in 2012, I have a very, very good friend of mine that I'd worked in financial markets for a number of years, a man called Greg Metcalfe. And Greg became the chairman of the Australian regulator, so the ASIC, which is the equivalent of SEBI. And I remember having this conversation with him in 2000, and I think at the end of 2013, and he said, "Loretta, you have to look at this technology, blockchain, because it's going to change the world and it's going to change financial markets." And we have daughters the same age. And I remember going home that night, and for whatever reason, I don't know, but I thought he was talking about Minecraft. So I got on the Minecraft game, and I'm thinking, oh my God, like, really? How is this thing going to change the world? So I remember ringing him on the Monday morning, and I said, Greg, I'm really confused, but I think it's an interesting game, but I'm not sure how Minecraft's going to change the world. And he said, Rita, I don't know what you're talking about. I was talking about blockchain technology. So I was like, oh, thank God. So then I went and read a book called The Blockchain Revolution that was written by a man called Don Tapscott. And for anybody interested in why blockchain is so revolutionary, it's one of those books that you need to read. There's another one called The Trust Machine. So 2 books that I read, and I read The Blockchain Revolution, and it clicked to me in my head immediately that this technology was going to be revolutionary, not only in financial markets and financial technology, but across every industry vertical. So at the time I was working as a consultant for a stock exchange in Australia. And I was a trader. So my biggest bugbear, I guess, for my entire life as trading derivatives was the clearing and settlement. Some products, equity markets, it takes 3 days. Fixed income products take 2 days to clear. If you trade water entitlements, that can take 30 days. Don't ask me why. So I looked at blockchain, not from Bitcoin, but from what the technology could do. And I looked at the concept of atomically swapping an asset, which is effectively what you do when you trade a Bitcoin.
Correct.
The asset takes that. There's no intermediaries. The decentralized ledgers remove intermediaries. They're very transparent, secure, and immutable databases. That's all it is. Blockchain is a very fancy word for a database. We use databases every single day of our lives, but this database in particular is what we call decentralized. So it makes it very, very secure. So I got very interested in how I could take out, with an atomic swap of an asset, we don't need the requirements for clearing and settlement anymore. And I looked at the Australian law, and in our Corporations Act, which is the equivalent of the Security Act, it referred to the software CHESS that the Australian Stock Exchange uses. And I was working for a much smaller exchange. And I remember, when I came off the trading floor, when we used to use our hands, we had to go from trading with people with our hands and doing funny signals to computer systems. So CHESS was built in a very archaic way in 1999 when we moved from floor trading to computer trading. Now, the problem with the CHESS system, it was actually written into the Corporations Act. And I worked out very quickly that laws need to be technology agnostic. And at this point, the clearing and settlement system of Australia wasn't technology agnostic. So I worked and lobbied very hard, and I had the CHESS requirement taken out of the Corporations Act. So clearing and settlement could be done with any exchange. And if we could use a blockchain solution, we could take out the post-trade risks of anything. So, you take out counterparty risk, all the risks that are associated with post-trade requirements.
Trading. So that's how you moved into compliance?
So, then it got very interesting. So then I moved into, I'd always done compliance, because when you run a bank in India, let me tell you, when you're the managing director of a bank in India, you don't understand your compliance requirements, you'll end up in jail. So compliance has always been something that I've been very good at. I was compliant when I was a trader. I think I was regulated across 39 different jurisdictions. So compliance to me was always going to be very important. So then I looked at Bitcoin again in about 2014. And it occurred to me very, very quickly that whoever was building Bitcoin or trading Bitcoin had no idea about compliance or financial markets. So I set up an association in Australia called the Australian Digital Chamber of Commerce. And the first thing we did, we actually wrote the self-regulation for Bitcoin, because in the absence of having any policy or regulation, best models, and we've seen this throughout history with securitization, with all sorts of other, tech, mobile payments was self-regulated by technology companies and telecoms in Africa in the 1990s. So in the absence of proper legal and regulatory frameworks, self-regulation works. I didn't mean it to be that good, but I think our self-regulation model in Australia for Bitcoin is now been adopted by 39 countries. So all of a sudden I became a policy expert, and I'm a banker and I'm not a lawyer. So that became a very interesting journey for me, because then I started to interact, with the Australian government and the different financial regulators that we have. And the first thing that was very interesting to me back in 2014 was the taxonomy of terms was very different across different regulators. And by that, I mean, what is the definition? What is the definition of Bitcoin? What is the definition of a digital asset? What is the definition of a crypto asset? What is the definition of a digital currency? And today, this is still a big problem. The conundrum of what I see with global standard setters continues. So I sat down with the Australian regulators, and Greg, who ran ASIC, the securities regulators were referring to digital assets. And then the money laundering regulators were referring to virtual assets. And the Attorney General's office were calling these things digital assets. Other people were calling them crypto assets, digital currencies, and whatever else in between. So I sat down as one of the policy and lobbyists for the Bitcoin and the Blockchain Association Australia, and we came up with a good term, digital assets, that we used across all the different regulators and government bodies. So that was 2014, and then fast forward to about 2015-16, I started to do a lot of research into blockchain technology and digital assets and tokenization. And so that led me to look at the internet. And I'm a banker and I'm not a lawyer. I don't know anything about electrical engineering, and I'm not particularly good at math for somebody that used to have to trade with her 2 and 4 and 6 times tables as a trader. So I Googled who built the internet, and a man called Bob Kahn came up, Robert Kahn. And very few people know Bob, but he wrote the transmission control protocol and the internet protocol. He sent a message across an open system to a man called Vint Cerf, who some of you may have heard of, which was the inception of the internet. And that message said, "Hello, Vince." So that was the inception of the first internet protocol. So I rang Bob and said, "Hello, Bob, I'm Loretta from Australia. Can you please explain to me how you use the internet?" Of course, he hung up on me. So I called him back. And then he believed me this time. So I flew to Washington. And since then, so since 2015, Bob has become my mentor in open systems, because I think when you're looking at policy and regulations, if you don't understand technology, you can't build regulatory and legal frameworks around this stuff. And I think that's one of the biggest gaps that we have in the industry, is the lack of education around the technology. So I now know more about open systems than I ever thought I would. And to be quite honest, mathematical equations around how the transmission control protocol was built. But Bob's wife is a lady called Patrice Lyon, and I urge everybody to look them up as a couple, because Patrice is very interesting in the fact that her husband was this electrical engineer that came out of DARPA that built this internet technology, and she was a lawyer, a regulatory professor at Princeton. Now, without Patrice and her ability to write regulation and policy around what her husband had built, we would not have the internet today. We would not be sitting here talking. So I honestly believe that she's probably one of the most influential women with her husband in creating an open system called the internet, and they don't get any of the credibility that they should, or the notary. So that was an interesting experience. I still speak to Bob all the time, and I then figured out pretty quickly that with the internet, we can move information. That's a very easy thing to do. The world has become this small village, because before the internet was built, you'd have to send letters and contacting people with hand devices. The world was a very difficult place to communicate. But the internet changed that, and that's the fundamental thing that the internet did. It allowed us to transfer information, but in a very insecure manner. So what was the one thing that happened when the internet was built? Bob was told to not include a security protocol. So whatever you think about Bitcoin, whatever you think about a digital currency like Bitcoin, you have to take that hat off and that prejudice right now, because the fundamental difference that Bitcoin made, it added a security protocol layer on top of the internet like we've never seen before. So this, none of you probably understand there's 139 protocols that are built on top of the first transmission control protocol that Bob built. We don't care. We just use it. My daughter uses this and it's very hard to get out of her left hand at any time of the day. None of us understand that. But when Bitcoin came into existence in 2009, it solved two problems. It solved the internet, the protocol layer of security on the internet, and it also solved the double spend problem, which has been the biggest problem in accounting history forever. And what I mean by the double spend, so when I put $1 into a bank and you put $1 into the bank goes and spends my dollar without it actually being there. So they double spend money per se. And that has resulted in lots of bad things happening, like we've seen recently. The GFC runs on banks. When banks printing money, that's not particularly good for economic stability. So that was the first application of blockchain, Bitcoin. Whether you like it or you don't, that was the first application. Now, it's not the only application, but we've seen this amazing amount of innovation come out from the internet and the inception of Bitcoin. So Bitcoin is just one blockchain protocol. I'm a big fan of Bitcoin, but it's taken me many, many years to understand where Bitcoin comes from, whether it be one person, two people, a group of people. I think if you do your research and you go back to reading a lot of literature back into the 1960s by a group of people called the cyberpunks, you'll see the birth, I think, of things like Bitcoin. But blockchain technology is a combination of three technologies. So it's cryptography, which has been around since 1945, since the Second World War, the ability
in the modern sense.
Yeah, in the modern sense. Then you have the internet, so it's cryptography plus the internet plus blockchain. The protocol Bitcoin, that's blockchain. So now, whether you call this a digital asset, and I'll refer to this new asset class, which I think was being born out of Bitcoin and Ethereum. Cryptocurrencies are just a very small part of this new asset class.
But it's an amazing journey. Back in 2010, I remember it was quite a fad to buy a coffee out of with a Bitcoin, because we had cafes even in Bangalore, I think in Koramangala, where you could pay Bitcoin and buy a coffee. And
I used to pay taxi drivers, just give it to them for free. The amount of Bitcoin I've lost over the last decade makes my eyes water.
No, but it's amazing, right? From buying coffee to someone giving away free to today, it's a tool to block, geopolitics, where the US wants to contain the price of Bitcoin to squeeze Russia in the Ukraine war, so that they're able to impose. I mean, it's grown so powerful that governments are thinking so seriously about it. So,
but it's it's an interesting thing, because Bitcoin was the digitalization of money. Now, money means something very different to everyone. What your idea about money is, and what my idea and what our viewers and our listeners' idea about money are very different. But money comes out of barter, and Bitcoin essentially is a barter system. I transfer on the internet on an application 1 Bitcoin to you. That doesn't involve an intermediary. There's no middleman. The Bitcoin just goes to you. That transaction is done. It's recorded on an immutable, transparent ledger. The entire world can see that. So I guess that was the inception of the digitalization of money. Is it currency? No. And I say that because I write a lot of policy and a lot of legislation now globally. So since 2016, I first started to look at policy. I ended up going to Bermuda in 2017 because the Premier met me at Davos at the World Economic Forum and I was speaking at an MIT event on how we could digitalize money. And he said, I think you need to come to Bermuda and write me a piece of legislation on digital assets. And I said, no, I'm not going to Bermuda, and I'm not going tomorrow. And somehow or other he convinced me. And so I went to Bermuda. And we wrote the first ever digital asset legislation in the world in 3 months. So don't tell me countries can't do this. And once we gave the ecosystem legal clarity in Bermuda, the amount of money it injected into that economy was phenomenal. We also then in 2017 wrote the first legislation around initial coin offerings. And those things back in 2016, 17, all I had to worry about was Bitcoin and Ethereum. And now Ethereum is a different blockchain other than Bitcoin, for those who don't know. Ethereum has done something very, very powerful for the world. It allowed the use of what we call smart contracts. So the ability, and smart contracts are not smart and they're not contracts. They are executing code which execute a contract which would normally take a very long time if it was done manually instantaneously. So Ethereum was the next, I guess, alliteration of blockchain after Bitcoin. So then you have two very powerful protocols. But the problem is with this world of technologists, and I've spent a lot of time, with the creators of Ethereum and Bitcoin and other alternative coins. The issue is that this ecosystem borrowed a lot of terms from the traditional financial markets and just traditional markets. So a digital asset to me is a digital representation of value that can be any asset. It can be, we can digitally represent now a security, a fixed income product, a water entitlement, a land title. We can digitally represent any asset, gold, that exists or doesn't exist.
That's the tokenization.
So that is what I call tokenization. We can now tokenize any asset, tangible or intangible, that exists or doesn't exist. So the inception of this new asset class called digital assets is the most powerful thing that we've ever seen in history, I believe. And what makes it so powerful is because we're moving into what we call Web. We had Web 2, which I explained with the internet was the movement of information. We're moving into a new world, what we call Web 3. Now, this gets particularly interesting because now over open systems, with using the internet as the base layer, we can not only transfer information, but we can transfer value to anybody in the world, whether you're a person, a corporation, poor, rich, anyone in between. This is the fundamental power of blockchain and the use of a digital asset. And my life back in 2017 was very easy because all I was doing was writing legislation and policy around Bitcoin and Ethereum, and an initial coin offering, which was just a digital crowdfund in essence, but it was being used by a lot of scammers and fraudsters. And once I wrote the law about that, stopped. Fast forward to 2023, I've got more problems than I could have ever envisaged those years ago. I mean, I came back from the Financial Action Task Force meeting on Friday. The Financial Action Task Force, for those who don't know, is the FATF. They're the global standard setters for money laundering and terrorism financing. They are the big kahunas of regulation. They're the ones you worry about, because if they blacklist you for money laundering and terrorism as a country, it has absolutely terrible, dire economic consequences. They've been worried about what they refer to as a virtual asset, as opposed to a digital asset since 2013. Not many people know that. But they've been writing standards around virtual assets for over a decade, long before any of the other standard setters started to do it. Now, their definition of a virtual asset, and I only learnt this after I'd written legislation around a digital asset, is very specific. The Financial Action Task Force definition of a virtual asset is a digital representation of value that can be traded, transferred, or used for investment purposes or a unit of payment. That, in essence, is a cryptocurrency.
That's a cryptocurrency. Yeah.
Yes. And a cryptocurrency is not a currency, by the way. This is the other fundamentally important thing that people need to understand. The ecosystem borrowed these terms. So had Bitcoin been called Zen token, no central bank in the world would have worried. But the minute you put coin or currency into an asset, everybody panics. Oh, my God, we've got a financial stability risk. And so I spent a lot of my life running around to policy setters and standard setters, explaining to them Bitcoin and cryptocurrencies are not currencies, because fundamentally, under the legal definition of a currencies, you're a store of value, a unit of payment, and I can't remember what the third one is, but a cryptocurrency is not those three things. So it is
because of quite a few crypto exchanges having come in India, a lot of people have been kind of getting educated. I'm sure you're familiar that India has one of the highest number of cryptocurrency users, maybe very small amount, but there are a whole lot of people with crypto asset, if you will,
So
digital
I
assets in your
set
time.
up the first association for crypto assets in India in 2015, and I had my chair as Lord Magnum-Desai, and I did it. I sit as an advisor on one of the original crypto exchanges in India called Unicoin, who I think are the most compliant. Everyone may have known about them and their High Court decision with the RBA. With the RBI, sorry. But cryptocurrencies are not currency, and so it's a very valid point to say they do not fit the legal definition of fiat currency. That money is very different from a fiat currency, and a cryptocurrency is not legal tender in the legislation I write, and I think that's very important because these cryptocurrencies, which are just a subclass of a digital asset, as I explained, are very volatile, they're very speculative, and they're very new. And if we all in the world throw caution to the wind and start saying these things are going to be, legal tender, we're going to end up in a very bad place. So, legal tender has a very, 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 specific definition. Central banks worry about legal tender. Central banks shouldn't be worried about cryptocurrencies because in the laws that I wrote, a Bitcoin is more akin to a commodity. And if you trace back the first ever legal decision about a cryptocurrency, which comes out of a courtroom in Nebraska, it deemed a Bitcoin to be a commodity. And I think Bitcoin has many more characteristics akin to digital gold, which is a commodity. And I think at the moment,
even in India context, it is the Government of India made it very simple by saying it is, not just Bitcoin, but any cryptocurrency as instrument of investment, as simple as that. So
but I don't think
you
that's
don't think it's a
no, and I think, and I've spent, because I work a lot with the standard setters, so I work now, I know more about money laundering and terrorism financing than I ever would have thought that I would have had to have known, but I have to know this when I'm writing legislative and regulative policies around virtual assets and digital assets, because they do have a criminal element. Nefarious actors will always use technology, but when the internet came in,
no, but to be fair, it's not an element come up because of digital assets or cryptocurrency, right? It has always been there. So you bring something else, there'll always be players who will be playing it. So it's just that.
The bad actors will always try and use technology.
Right.
Always. And when the internet first came into inception, people said it was good for gambling and pornography. How wrong they were. But there is still an element. And if there's 1% element of nefarious actors in an asset class, you need to stop that. And so that's what I always say, when you look at the FATF have 40 recommendations globally around anti-money laundering and terrorism financing and the proliferation of nuclear weapons. Now, those 40 recommendations go across a whole slew of different assets. There is a number that relate exactly to a virtual asset. And that's there for good reason, because I think none of us in the ecosystem, none of us in this ecosystem want terrorists to blow people up. People don't want anybody trafficked, and they don't want drug lords to be able to get kids into drugs, and we certainly don't want the proliferation of nuclear weapons. So if we all look at why regulation is important, and from a global level, we can all happily adhere to these standards, because none of us want for the social and economic good of humanity for these things to happen. But that's just one regulator, and then you also have to look at cryptocurrencies, not blockchain, the technology itself, which has so many applications, but there's a lot of fraudsters and scammers, a lot of consumers and investors being really hurt. Take FTX, for example. But, we need to protect people. But I don't think regulators can regulate technology. And I think that's why I say laws need to be technology agnostic. And regulators, they're not in the business of telling my 19-year-old that she can't trade a Bitcoin. All a regulator's job is to protect people. So all they need to say is buyer beware. And I will say this as a trader. I've never traded an asset that goes one way forever. No asset class goes up forever. Assets go up and down. That's just the cycle of markets. So as long as people understand that there's a risk, and cryptocurrencies are highly speculative, highly risky, and highly volatile, as long as you know that every cent you put into a cryptocurrency, you may lose it, but you understand that risk, you go right ahead. So I think all the regulators need to say on that side, that front, is buyer beware. But when we're
Right.
looking at things like crypto exchanges and FTX could have been trading jelly bean derivatives. It had nothing to
Exactly.
do with Bitcoin.
Correct.
And probably if they had been trading jelly beans, there would have been a lot more regulations around that because the jelly bean's a commodity. But it had nothing to do with the underlying asset. They were a centralized exchange that was acting as an intermediary.
It was primarily a failure of governance, right?
It was a failure of regulation because, I mean, and it's interesting that the countries that I've written laws and regulation in, you've never heard in the news. And that is because I have very stringent requirements and criminal and civil penalties around people that break the law.
In India context, you might recall, I guess you were here in India when Satyam episode happened.
Yes, yeah, but that's just.
So how different would you think FTX and Satyam? I actually explained to people about FTX using Satyam that this is what happened. Took the money out of Satyam, put it in Meta.
And all that happened was with FTX is that there was it's not difficult. Fit and proper management. If you had due diligence on who was running FTX, if anyone had have done some proper due diligence into Sam, they probably would have worked out that it's not fit and proper to be running it. Board meetings, all the things that securities regulators expect of normal companies. None of
perhaps it was necessary, right? Because see, in India after Satyam, the regulations have become so effective. Independent directors' roles have become very accountable. People get arrested even as an independent director if they are part of the board and if they're not playing their role
that's
properly.
normal business. And this is where this industry, if it wants credibility, it needs to be regulated like the rest of the world. I was actually trading Satyam the day that in India that it went down because I was a derivatives trader. So I saw the inconsistencies and why that was able to happen. We need these proper regulations in crypto for two reasons. One is to make it mainstream, because if consumers and investors are going to be put at risk and institutions are not going to invest in this ecosystem. So regulation is very, very important. The second one I said is that we need to make sure that we keep the nefarious actors out of the ecosystem, the money launderers, the terrorists, keep them way out. And the third is to make sure that we don't have a problem around financial stability. Now, when I first started looking at Bitcoin and you in 2010, I remember going into the Financial Stability Board, which is the standard setter for financial stability. Now, they came into existence after the GFC. I remember the GFC very well because I was a trader in India, and India was quite sheltered from the GFC, but the GFC still has ramifications for the global financial system today. So the Financial Stability Board, I guess, they're the standard setters for financial stability to make sure that a GFC never happens again. 4 years ago, they said to me, Loretta, we don't see an issue with cryptocurrencies because they're too small a part of GDP. Fast forward to now, the FSB have come out and I've helped them and I've replied to their consultation. They've put out 9 recommendations on the regulation of digital asset or crypto assets, as they call them, to maintain financial stability. So when an asset class becomes on the radar of the Financial Stability Board, that there is a particularly large risk that this ecosystem has so much teeth, trillions of dollars, that it can bring down a global economy. That's very, very, very significant, and it's an incredibly vast move, and it shows you how fast innovation has moved since the inception with this technology. And it's not it's not about Bitcoin and Ethereum anymore. And I do worry with policy makers and regulators that I deal with on a daily basis globally, that they don't have the education, and some of the legislative requirements that I'm seeing come out of some jurisdictions is absolutely terrifying me, because they're still sitting back in the days when all we needed to worry about was Bitcoin and Ethereum and the odd ICO. Move to 2023, we've now got Web3. So we're seeing this absolute colliding of emerging technologies. GBG chat. Did anybody worry about the regulations of that 5 years ago when we knew it was being built? No, but it's here today. And the new versions of GBG chat and AI in the next 6 months is going to be absolutely terrifying for humanity. But you've got non-fungible tokens, you've got decentralized finance, which has opened up a slew of issues for all regulators who don't understand what this looks like.
Loretta, I want to ask you, you're familiar with either the rumor or a conspiracy theory of the PayPal mafia guys are the ones behind Bitcoin. So what's your take on that?
Okay. I've spent the last over a decade, last 12 years of my life in this ecosystem. When I first started in the world of Bitcoin and Ethereum, I spent 2 years running around the world going to high school yards in countries, the slums in Delhi, university courtyards in Eastern Europe, pinball parlors in New York, areas in Argentina, understanding what this Bitcoin thing was. And I think I'm pretty close to understanding the key architects of how some of these systems were architected. Now, there is no way in high hell that could have been the case, because if you trace back Bitcoin from the technologies it came from, in 1945 cryptography came out. In 1965 there was a group of people that called themselves the cyberpunks, who were very deep computer scientists that were pretty anti-government and pretty anti the system, that started to write papers around different models of digitalization for assets, privacy. So then if you look back, 1971, before the internet was actually out, but was actually probably in the formal way that it is today, there was a number of computer scientists writing about smart contracts. So this was long before Ethereum thought of the idea of smart contracts. And then Bitcoin came around in 2009. It was probably a combination of a group of people. I don't think it was all just electrical engineers, to be quite honest. And as we know, a lot of the technology advances since World War II have all come out of US defense. Like everything comes out of US defense. But I think...
no, but the rumor came up again because of Elon Musk's tweet.
But does anyone really believe Elon Musk? Like this is the other issue. You put a lot of power in charge of one person, and they can say,
"Oh no, not just that it's him, but possibly the PayPal mafia. Maybe a few of them together."
No, I mean, I think honestly, Nick Szabo, if anyone can look him up, he was a computer scientist and electrical engineer that talked about smart contracting and digital gold in the 70s and early 80s. I've spoken to Bob Kahn about this. He built the internet. He talked about URLs being digital assets that he actually tried to patent a central bank digital currency, which he didn't know was a central bank digital currency with the Federal Reserve in 1973. So it was not, I think conspiracy theorists are always looking for good answers to why things come up. I don't believe, though, that Bitcoin was created by a bunch of electrical engineers. I've spent too much time with...
in fact, last year it came up twice. One was when Elon Musk tweeted those brand names, right? And the other one, the rumor mongers came up again, is that at the beginning of Ukraine war, where Peter Thiel diluted almost $8 billion worth Bitcoin, which kind of crashed the Bitcoin price and took the whole cryptocurrency down. So those are the two times where these rumors again spiked up. That is it, PayPal.
It's
just that the market reaction, and also that $8 billion is a lot of money anyway. I mean, it's possible that Peter Thiel had that kind because he must have been one of...
He's like, it's like, you look at when George Soros bought down the Bank of England, it's like, what the conspiracy theories about that?
Well, it certainly suited American interest in putting the pressure on Russia, but those were the times these things spiked up. So,
but rumors, always, as a trader, we always say buy the rumor, sell the fact. It's interesting when you see these things, but in my belief, because if you read a paper that was put out by Nick Szabo in the 1970s, he talks about digital gold, and the Bitcoin white paper, which anybody can Google. It's it's a 9-page paper, and I urge people to read it if you haven't read it, because it explains exactly what Bitcoin is. But if you go back and read this paper that Nick Szabo talked about in the early 70s, it was almost identical. And if you go back to the 1960s, And you look at the cyberpunk, some of the newsletters that came with cyberpunks, almost identical. So there is no way that it could have been one group. But I do believe, and I work in markets. I've always worked for investment banks. There is no way that a bunch of electrical engineers could have talked about a peer-to-peer cashless trading system, without understanding the intricacies of central bank governing. And I do a lot of work with central banks. I understand prudential regulation very well. And it was ironic that Bitcoin came out after the GFC, the months when the Bitcoin white paper came out. To me, it was not a bunch of just electrical engineers. It was too sophisticated in understanding what a cashless peer-to-peer transaction system would have looked like. And it had to be somebody that understood how central banks operate.
Well, that is another reason for suspecting these guys, because they actually were working on PayPal at the time, right? So
Yeah,
they were building
but
PayPal. So no, I mean these were the things to kind of back the whole thing. But yes, I mean it can be just it's a conspiracy theory end of the day, right? There is.
I mean, but this stuff was talked about in the 50s and 60s. These people weren't even born, So I think it's always
Possible they read her, because these guys are all smart guys.
Yeah,
I mean, anyway, see, there is no
I could be
evidence
the
to it, and
female
they are not.
Satoshi.
Yeah.
If we're going to go through rumor mongers, I mean, I've often been told, "Am I the female Satoshi?" No, I'm not, and I couldn't keep a secret if I tried. But I think there's always lots of conspiracy theories. I think Hal Bella, who's the guy that died, I think Bitcoin was created, and I think that the people that were behind Bitcoin valued their privacy and their secrecy, and because everybody in the world is Satoshi and nobody's Satoshi. And I think that's one of the fundamental beauties of Bitcoin, is that we're all Satoshis, and anyone could be Satoshi. There is no one to pinpoint it on. And I think that in a decentralized world, and if you believe what the Bitcoin maximalists try and preach, then this is the world that we want. We want a world where nobody controls everything. It's a decentralized world where governance models, are controlled by the people that use those networks.
But for you, coming from a banking ecosystem or centralized ecosystem to make this, I mean, mentally it must have been a huge shift. And how did your peers think about you? I mean, because it's challenging what you came from, right? I mean, it's fundamentally questioning your. It's like a new avatar of yourself, right? Which is contrasting your past. And so all your peers must have been the serious bankers who would have thought you had gone crazy, or
they did. They thought I'd gone completely mad. I remember, and it's so funny, but when I first looked at how all this works, the one thing I loved about blockchain was that we could disintermediate markets. And that's the thing that always really excited me, because intermediaries and banks are the biggest, and that's why banks don't like, cryptocurrencies and these digital assets, because they're going to be disintermediated. Now it's an interesting point, because they make money out of friction in systems. I still send money back to India. I live there. I had staff in India. Some days I can send that money and it'll take 2 days. Some days it takes 4 weeks. Why? And it cost me a certain amount of money. So when you look at the amount of money and the friction in systems that cost, so say you're in Canada and you're sending money back to your grandmother in Gujarat, some days, if you're moving thousands of dollars, okay, it's probably not an issue, and you've got to wait somewhere between 1 day and 5 days. Some banks will tell you that it's instantaneous, but you still pay a fee. If you're moving a small amount of money, you're moving $200 a month, say, and the bank's charging you $50 to do that, that's a huge hit. But I mean, and it's interesting now, I don't get paid in fiat currency. I take stable coins, and that's a completely different conversation. But yeah, I've always not understood how intermediaries make money out of friction in systems. Now that we remove the friction in the systems, the intermediaries are going to be displaced. Having said that, did the internet destroy banks? No, they just had to learn how to have different business models. The consumer, with the inception of the internet, is now centric in every transaction. Whether you're poor, whether you're rich, it doesn't matter. Your choice, because of this thing, has made the consumer centric to every single transaction we see across every industry vertical. So I remember, and in the early days, I used to advise, a lot of the crypto firms, and they didn't have any money. I mean, I'd be sitting in, pinball parlors in New York, and I'd be buying the pizzas and the Coca-Colas because these kids had no money. Fast forward to 2019, and they're buying Swiss government bonds and jets. So so it was a big change for me in the fact that I didn't really understand, and I was happy not to take money to advise people. I've lost a lot of money on a lot of projects that gave me tokens which are worthless, but I've never sold any Bitcoin. I've held Bitcoin for a really long time, and I hold it because I believe it's a store of value. It's the one thing that I do as an experiment. And I remember, bond traders, I used to trade bonds, and they'd say I was completely mad. And now they're ringing me up saying, should we be buying Bitcoin at 29,000? I'm like, are you for real? Like, you're the bloody bond traders. Have some. When do you buy markets on their highs? Have some sense and sensibility about you. So there's this whole idea, the FOMO that happens. But they're speculative assets. If you understand risk, and I have this argument with regulators all the time, and my own ecosystem of bankers, really, did we understand risk as bankers?
Well, what do you do now? What are you doing right now?
In which capacity?
I know you wear multiple hats. You're into consulting, you're advising, what takes most of your time?
So I chair the International Digital Asset Exchange Association, which is we're the international body of different blockchain associations and different digital asset exchanges. And I work a lot with the standard setters, so making sure that policy and regulation from a standard setter point of view understands the technology. So I spend a lot of time explaining the technology and digital assets or crypto assets or virtual assets, depending on who you're talking to, which standard setter, on the ecosystem. I also am a founding member of the World Members Council.
Sorry, so that agency, how many countries are part of it? How many countries have members?
I think members of the Digital Asset Association, I think at the moment we have 39 countries.
Okay. Is India part of it?
We do. We have an Indian exchange. We do. And
which one is?
We have Unicoin.
Unicoin. Okay.
Yeah, but I think it's an interesting thing for me, the evolution of how I've seen India, because I lived in India for almost a decade running banks, and then I saw the need to set up an association in India in 2015, which I did, and I put some people may know Lord Macdonell-Nadeau. He was the chair advisor to the association. He's an interesting man because he's Indian.
What's his name? Sorry, I didn't.
Lord Macdonell-Nadeau. So he's a member of the.
Oh yes, okay. He's from UK.
Yes, but he's Indian. He was the youngest ever Indian to go to Oxford. He's taught 17 central bank governors, 7 of which sit in office at the moment. He was with Nixon the day they got rid of the gold.
He's a member of parliament there, right?
Yes. But he's also probably one of the greatest macroeconomists of the last century. He's seen the gold standard removed. And he's very, very, very rational when I talk to him about Bitcoin and digital assets, because he sees it in a prudential view. He's like, this thing is just an asset, but people buy assets all the time, but it's very speculative. Right. He's the voice of reason, I guess, and he's very good at explaining it to central banks, because central banks have been very, very worried and concerned. And he's like, this is like, why are you worried about something that...
So was he one of the big push for the CBDC for UK adopting to CBDC?
No, he can't stand CBDCs, and I don't blame him. No, and I really agree with him that. So CBDCs is an interesting phenomenon. Central banks used to not want to talk to me. So a very funny thing happened in 2019.
So you don't recommend CBDCs?
And I'll tell you why, the rationale I have around CBDCs.
Yes, please.
So CBDCs only became a thing when Facebook announced to the world that they were going to create their own cryptocurrency, and they were going to Meta, which they're now Meta, Libra. So
Libra.
So it was the first time in history, and don't forget they own WhatsApp. They have partnerships, with a lot of the big tech companies. So it was the first time in history a tech company the size of Facebook could challenge a sovereign state. They dared to stand up and say, we're going to produce our own currency, which you can use. And you imagine how dangerous this would have been. So my daughter could send me a message on WhatsApp. She could transfer me a token on WhatsApp. She could use that token to get her Spotify membership. She could have a photo taken on Instagram for a coffee shop, and they paid her in a token. That entire ecosystem would have controlled money, and no country could do anything about it except maybe the Chinese stand up to Facebook. So this really got the central bank governors alert. Before I used to talk about cryptocurrencies, they weren't all concerned. But the minute Facebook dared to threaten the sovereign ability of a jurisdiction, every central bank governor stood up. Now, the problem with the central bank digital currency is twofold. China have been building one, but the Chinese, as we all know, like control. When in history is it a good idea that we have central banks that have their own legislation that are put there to do two things: control the financial stability of a country and do monetary policy and fiscal policy? When did anyone ever think it was a good idea to allow central banks to start to control people's money and give out housing loans and accounts? We have commercial banks that do these functions very, very well. They're in the system for very good reason. And I think the unintended consequences for generations to come, if we give central banks the power to control people's money, they can control everything we do. That's number one. The second problem is, if you look at
105 countries have initiated
everybody has
CBDC pilot.
Everybody, but
in fact, India's pilot is running close to 100,000 now. Retail.
And I don't think they're such a bad idea.
It's not such a bad idea, right? Still.
But no, well, only
yes, whatever you said in terms of central bankers, I think it's controlled by bureaucrats, and bureaucrats hand in glove with politicians.
It's terrible.
It's a huge risk. But this is where it demands every country to be far more aggressively democracy. People should understand their roles in democracy a lot more aggressively hereafter, right? Otherwise, CBDC.
But there's a problem. So I call it the CBDC trilemma. There's a problem between compliance, security, and privacy. This is the trilemma of the CBDC. No central bank pilot, and I've worked on a number. So I do understand my subject matter on CBDCs very, very well. I've been working on CBDC since 2015. I actually helped and added to a paper.
It does eliminate the middleman to a great extent, right? Because a lot of the CBDC transaction fee is going to weaken banks. Because banks' earnings are taken out of the play.
But we don't need to take banks out of the equation, and nor should we.
No, don't have to, but at least their profitability is cut off, right? I mean, today, you were just complaining about them playing the middleman. Today, CBDC, in fact, to India, any of the foreign transfers will get onto CBDC. So it will move fast and direct to the account somebody has to get, and not into banks. And then they keep a percentage.
But how do you control the compliance versus the privacy and the security of that happening with the central bank? Central banks have very, very closed systems for very good reason. They hold a lot of money in vaults. I mean, if you look at the RBI in India, it's got a lot of armed guards around it. That's because they hold a lot of gold in vaults. So you've got to add on now, when you're looking at CBDCs, the cybersecurity risk. What happens if somebody hacks into a CBDC? What happens with the inflationary and deflationary risks of that, number one? How do you control the privacy between a user, myself, and a central bank? That's very difficult. And the compliance. How do you stop things like automated money launderers using a system? So, and the other problem is that countries that have looked at it as a all-in situation. Some countries have a specific need for a CBDC. So I'll take the first example of the ECCB, so the East Caribbean Central Bank. Now, Timothy Antoine, the governor of that bank, I know very well. He's very young. He's the second youngest governor of banks of a central bank in the world. The youngest is the Bank of Mauritius, Habesh Sirgalom. Now, the problem with the East Caribbean is he has 7 islands under his control of central bank. Now, because of the FATF requirements and compliance issues, there is no corresponding banks in the Caribbean. So that meant that all the corresponding banks had left the Caribbean. There was no Standard Chartered, no Bank of Canada, yet nobody. So he had the problem of having to bank his people in the lieu of there being no commercial bank. That is a very, very different use case. And has that started to work? They're still having problems with the technology. Same with the sand dollar in the Bahamas. Now, the problem is, if you look at blockchain, and if anybody thinks that the quarter system with Ethereum is going to be working, you've got to look at how a blockchain works. It's one transaction validated at a time. The financial system as it works today validates trillions of dollars worth of transactions every second. If you're using a blockchain, you are getting one transaction validated per second. That does not work for financial systems. It will break. So the scalability is a big, big problem. If you're going to do it on a blockchain, I don't think CBDCs need to be operated on a blockchain, on a public blockchain, because that's very inefficient. Public blockchains are very inefficient. They're very energy consuming.
I think most of them are on a private chain anyway.
But even on a private chain, you need to have parallel transactions. There is no blockchain in the world at the moment. There is no solution that does parallel transactions. Until that is solved, the CBDCs will not work. There's the biggest fundamental problem is the scalability and the throughput. So what we call the throughput dilemma of CBDCs. In context, maybe if they do get them up and working, there'll be a certain amount of the population that thinks it's a good idea. But that doesn't mean that we should all switch to that. I think people will still use ATM systems. There are certain amounts of the population that like cash. You shouldn't take cash out of systems. Cash is probably the most decentralized thing that we have. And to be completely honest, cash is much more decentralized than Bitcoin, because Bitcoin is not anonymous. You can track and trace every single Bitcoin transaction that moves across a ledger. We can all see it. It's what we call pseudo-anonymous. Cash is completely anonymous. So I think, when you look at these systems, we can't just replace one thing with another. That's very, very dangerous. And I don't think the uptake in the countries that I've seen CBDCs in, the uptake's not there. I'll give you a good example, Nigeria. So Nigeria, the central bank banned Bitcoin in 2019. Unintended consequences of doing things like this, they introduced a CBDC. Do you know today how many people use Bitcoin for normal peer-to-peer transactions versus the CBDC?
No clue. How many?
This is a country of 230 million people. 75 million people use Bitcoin for daily peer-to-peer transactions. 30,000 people use the CBDC.
That's all. I think if they were to have something like UPI, what we in India have, probably this problem wouldn't have been there.
Well, I think but I think mobile payments is different. I think in India...
Right, if that was to be brought in first, before they brought in CBDC, I think they would have handled it much better. I
think there's a privacy issue. That's with all emerging markets, people don't trust central banks.
No,
I think it's a privacy issue. I don't think people want to put their money in the control of the central bank, because once they control your money, they control everything about you.
Well, that is true, and it's understandable also. But I think it again comes back to people's participation, right? I mean, if it is a democratic country, then if you can bring in better accountability. Honestly, India has a long way to go from that point, but yes.
But mobile payments work equally as well. I mean, I sit on the board of a number of banks and fintechs across Africa. Mobile payments have been a thing in Africa for over a decade, and they work extremely well. And that was because, like India, which missed the desktop revolution, Africa moved straight to smart devices, and the infrastructure of banks is very, very bad. So the telecoms had to come in and play the role of banks. Mobile payments work as well as the CBDC will, and in India, I mean, I can use my BPay and pay with a telephone number to my rickshaw driver. Those things work very, very well. Like, I don't understand. I think on a cross-border wholesale, level, a CBDC makes a lot of sense because there's so much friction in cross-border payments. You know, they're expensive, they're slow. I think on a wholesale level,
that is the first one to go pilot, and I think that's going to be huge, and it's great for businesses. It's great for businesses.
I don't think for retail. I think for retail, it's a long way away, and I do not think people.
Retail, in my take, is that it's more to do with the people. I think unless we have a lot more mature democracy, it's a big risk. If you don't have a mature democracy, then retail CBDC is a big risk.
I mean, I think a lot of central banks also thought over COVID, like when they had populations, like this idea of helicoptering money into people's accounts because they couldn't get people couldn't go to banks. You know, there was a lot of reasons about that.
We technically you don't need CBDC, right? In India, it got started. They created this Jan Dhan. I think that was one of the flagship initiatives of Prime Minister, right? So pretty much opened account for everybody, and then they started doing direct transfer. So that is addressed.
And I think that's as good as you go. I mean, I was India the day that it got demonetized. The same thing happened. You know, the next day, how many people started using mobile payments? And the uptake in that was in the millions. In a 24-hour period, you saw millions of people move into a mobile payment.
Today, it's a challenge to use cash in most places. Yes. People say, I don't have change. Please pay it on phone.
Same in Australia, but I think we can't take cash out of systems because, as I said, cash is the most decentralized thing we have. If people want to hold cash, it shouldn't be illegal to hold cash.
Yeah, it shouldn't be. Totally. And I think at least as of now, what are they talking about? They're talking about cash will be there, but below a certain denomination. So not above 500 rupees in India context. But irrespective, I think, it'll take a much longer time for implementation. So one more question I wanted to ask you. Are there any influences or people who are inspiring or who have inspired you to be what you are? I mean, your movements have been so seamless. And, right, it's as if you just slipped into it so easily. And today you work with government agencies and policy bodies and industry bodies, industry associations across different countries, continents. So is there anybody who's been kind of a role model for you?
I have a lot of role models, but it's interesting. I think I'm the person I am today because I lived in India, and I say that completely, wholeheartedly and unobtrusively. India taught me to be the person I am today, and India is an interesting place.
How so? I mean,
I'm a single white female with a child of my own. You know, so to walk into India and to dare to be the managing director of a global bank was quite challenging, to do as a foreigner. But India taught me three things. You have a lot of patience. No doesn't mean no. You ask the question in a different way, and there's two sides to every story. I remember in 2010, I had a lot of staff because I worked very hard. I'm a single mum. I have a little girl of my own. At that stage, she was 3 years old. So I had a lot of people help me, which is something in India. And it struck me one day, one of my staff members, and this is a really sad story. So one of my staff members had a little girl who was 15, and she lived out in the slums, and my daughter used to go and sleep out in the slums, in the back of Santa Cruz all the time. And people used to get very upset with me about that. And I'd say, these people look after my child when I'm at work 18 hours a day. Just because you're poor doesn't make you bad. And I think people have a very misconception of things like this in India. So Sophie used to go out, all the time, and I used to spend a lot of time out in the slums. And I think she grew up to be understanding that there's a lot of disparity in life. And this little girl went to work one day at 15 when she was one of 8 kids, and she got raped and murdered by, I think, 19 guys in a bangle shop in the back of Mumbai. And it was very hard to identify her because she'd been, they got rid of the body, and I had to pay for the funeral of this little child. And I remember thinking, there has to be a technology that can stop this. How do we ID people so they just don't go missing? They're not forgotten. And it was one of the things actually before Bitcoin and thinking about blockchain and financial markets that did attract me to this technology. Digital ID, I think, is the biggest thing the biggest challenge we have in this world, and blockchain can solve the digital ID problem, and we can stop things like that happening. So that's actually how I got into blockchain, and it taught me that technology can solve so many problems that we have. Climate change, all the things that for the past generations that we've done to the earth and to each other, we can actually now change with technology. So that's always been my driver, to make the world a better place. I've never been driven by money, and I used to, it was funny, ironic, I guess, that I worked in financial markets for so long, because the money aspect of it and seeing people driven by money, I found quite revolting. So I've always been a big advocate of technology and technology for economic and social change. And then when I discovered things like Bitcoin and blockchain, the decentralization is how we can actually change the world is the most important thing that we can all do. So I'm driven by the fact that I think, now everybody has an equal opportunity. It doesn't matter whether you're born poor, rich, or in between, whether you're educated or not. You have this thing, you have access to information, and you can now transfer information and value. So the amount of entrepreneurs that we can create in the emerging world will surpass the Americas and the Europe in the next 10 years. And that's what drives me, because I really think I can make a fundamental difference to making the world a better place and that happening. I find as an industry, as we are in blockchain, a lot of kids that I work with, they're young, they're very young. They don't understand policy. They don't understand, why they have a money laundering terrorism requirement to report to a standard setter. They're young entrepreneurs trying to build businesses, and often they're technologists that come from, electrical engineering that are socially inept. They want to sit and code. They don't want to go out and talk to anybody, let alone a policymaker. So I'm driven by the fact that I can stand in front of this industry with my head held very high and navigate the world of policy and governments, which can be very scary, and law enforcement agencies to a bunch of kids just trying to build technology. So that drives me, and I really do believe that what we're seeing at the moment with this conversion of technologies, AI. And decentralized finance, which I think is the most fundamentally significant change to what we see in finance yet. The fact that now we can all be our own banks. We don't need to rely on institutions and intermediaries. The metaverse, non-fungible tokens, all these things in these innovations are great and they're incredible, but they still need regulation, because we can't just have technology doing whatever it wants, because at the end of the day, we as people still like to hurt each other. So we need to ensure that that innovation is not stifled, but there is boundaries, and there are parameters in which businesses and technology can operate for the better of society and humankind.
Wonderful. I do understand that this was a cut-off time you had, or have you stretched? Do you have some more time?
Oh, yeah, I just cancelled my meeting, so yes. So I can keep going. I mean, only if you're finding this interesting.
Oh, yeah, definitely. In fact, I wanted to ask you if you could make some recommendations to our listeners and audience about books and podcasts.
Yep. Okay, so I have a sleuth of reference documents. You asked me who I'm inspired by. Bob Kahn, the creator of the internet. And as I said, I think Bob is not going to die a wealthy man. He's probably, he created fundamentally the one technology that has changed our lives forever. And he doesn't get the recognition of that. So I'd go and read some papers by Bob Kahn. He's printed plenty of papers under DARPA, because you need to understand open systems. And I think this is the fundamental lack of education I find with policy and government makers, is understanding open systems, because open systems and the transfer of information and value, if you don't understand how they work, you can't get that concept in your head. Andropoulos, who's a Bitcoin maximalist, who does a lot of YouTubes about how you store Bitcoin, how you hold it. I mean, that's one of the other problems I find. You know, I go into central bank governors, they go, "Oh, we don't like Bitcoin, we're going to ban it." And I'm like, "Well, do you have a Bitcoin wallet?" They go, "Oh," and I say, "Let me give you some Bitcoin. You see how easy this is." People are banning stuff that they don't even understand how it works. You know, to me, that's just nonsensical. So, and Andropoulos, he's got some really interesting YouTubes on what we call keeping digital assets on this thing is very dangerous. That's what we call a hot wallet. It'll get hacked. You need to be able to understand. There's a saying in the ecosystem, my Bitcoin, my key is my Bitcoin. You have to understand how to access your Bitcoin. If you give it to somebody else to hold for you, you're probably going to lose it. So Andropoulos is, and Andreas Andropoulos is a very, very good YouTuber to watch. Read some of the papers by Vitalik Buterin. Buterin is the co-founder of Ethereum, which was, I said, the second blockchain that created this concept of smart contracts. He's written some really interesting things. The Trust Machine by a guy called Mike Casey. Don Tapscott, The Blockchain Revolution is a must read. You've got to educate yourself on this stuff. I think it's very, very important, because nobody can teach you. So they're probably my top recommendations. If you're starting a business and you're looking at things like how are you going to be compliant for your business, and you want to start a crypto exchange or do a non-fungible token, make sure you understand what the policies, in lieu of the fact maybe there's no regulation in India or other countries, doesn't make you ignorant, and ignorance is no form of defence in a court of law. So to keep yourself out of jail, I would read the recommendations on crypto assets by the Financial Stability Board. It's a PDF file. You can just Google Financial Stability Board recommendations on crypto assets. That's very up to date. Read the Financial Action Task Force recommendations on virtual assets. That was updated, I think, in November last year. Again,
well,
the PDF recommendations on.
I'll request for the links from you that we could share it in this podcast.
Yeah. Happy to do that, because they're also now talking about non-fungible tokens, decentralized finance, as is the Financial Stability Board. And anybody that's looking to start a protocol, you need to understand what your requirements are, at a global level. I'd also read the IOSCO, the International Organization of Securities organizations, which is the standard setters. So the SEBI, the standard setter for the equivalent of SEBI. Read their recommendations around crypto assets and digital assets. I think it was put out last month. So ignorance is no defense, and you need to understand, if you're getting into this space, everybody needs to be multi-skilled in the world of digitalization. You can't just rely on the fact that you're a technology and you got your blinders on about what policy says.
You can work with blinkers.
So I think they're probably the.
No, please go on.
I can send all those links, because I think. Sorry?
I just echoed you. I said you can't work with blinkers on, so you got to.
No, you can't work with blinkers on. And it's very, and I encourage people, businesses and entrepreneurs, to join associations, because we have to have a collective voice as an industry. And you can't do that in silos, and you can't do that on your own. There's something very important. India just released last week the AML-CTF legislative changes that came out of the Financial Intelligence Unit, and the travel rule. So the travel rule, I think, is the fundamentally most important recommendation out of the FATF. Now, what that says is that any virtual asset service providers, i.e. a crypto exchange, just as in the banking world works, SWIFT is the equivalent. So when I send $1 from my bank account to your bank account, the bank checks who I am, they check who you are, they go, all right, that's okay, we'll send that transaction. That same rule is now going to be implemented in crypto, and regardless of whether crypto exchanges like it or they don't like it, they have to do it in the next 3 months. Countries have to implement it. So you need to understand who is behind the wallet that's sending the Bitcoin to another exchange. And so you cannot send a transaction to another exchange unless you've worked out who the actual person is, the beneficial owner of that wallet. That's very important. That is something that really needs to be understood much better by the industry, because at the moment the industry aren't complying with it, and the compliance officers of these businesses are not understanding what their requirements are for AML/CTF. As I said, just being a technologist doesn't mean that's what you can do now. You have to understand compliance. You have to understand your obligations legally, at a standard setting level. So there's a lot of travel rule solutions out there for exchanges. I sit on the board of a decentralized one called the Shift Network, and that what we call it shards information, because the problem I see with the travel rule in the industry is when banks send information, financial information, and information on their customers to each other all the time. But the SWIFT network relies on one thing, and that's trust. So it's a trusted network. Banks trust that they're sending the information to another bank who they trust. In the world of cryptocurrencies and virtual assets, nobody trusts anybody. So we work in a world of untrust, but now we have to start to send financial and identity data to other institutions that may or may not be what they say. So I think in the cases of centralized travel solution rules, that won't work because they're hackable. And that's what I always say about, blockchain is just a decentralized database. It means that nobody's got control over that database. We all use databases every day, but most of those databases are controlled and the information sits in a central database. Those are honeypots for attackers. Hackers attack stuff that they can make monetary gain out of. But when you decentralize the database, you take away that incentive. So I think centralized travel rule solutions are going to be very dangerous. I think looking at ways that can be decentralized and enabling the technology for things like privacy, for moving data, for not sharing data with a group of people that you really don't want to share data with, is very important that we actually use the blockchain and some of the awesome solutions that come out of that. But that's a big one. I think the travel rule is going to really impact a lot of businesses. And it's basically KYC.
Well, I would actually, in our next conversation, I would really like to ask you about I'm a big believer in the distributed approach, as a DLT.
Absolutely.
Instead of decentralization. So that, I believe, is going to be the core for more enterprise adoption. So I'll come back on that and ask you. And thank you so much for sharing your journey.
We could have a big fight about DLT because I don't believe in DLT at all. I think with all blockchains, there's a trade-off between privacy and security. And I think private blockchains versus public, it's always a trade-off. You got to figure out which trade-off that you want to back.
Fair, perfect, and I'll look forward to that fight in the next conversation.
And then we can talk about non-fungible tokens and get into DeFi more, and and the metaverse and because I think and the Web3, because these are really important topics that are relevant.
And the tokenization, and particularly
and the tokenization of assets.
Yep. Wonderful. Thank you so much.
I hope that was useful.
I'm sure, and I think our audience. Also, there are links to reach and follow Loretta. She's doing amazing things. All the links are there, so please do follow. Keep following, and do share it across your network for those of whom. Two things. One, those who are interested in blockchain, and two, those who are interested in future, because she's doing things and which are impacting us today and tomorrow. So with that, thank you so much and enjoy the ride, and do come back to follow the next conversation.
I look forward to it. Yes, you can follow me on LinkedIn for those who actually have some sort of policy enjoyment. Not many people. It's like regulation's not cool, but it's required. And yeah, my Instagram often has my travels, which is quite interesting. So I think I'm the real crypto mama on Instagram. So you can see me travel around the world
All the links
in
are below,
insane rate.
so please do
Okay.
follow. Yeah.
And I'll send you all those reference documents for anyone that might be interested in those authors and those influencers that I said that are very important, and also those recommendations by the standard setters.
Wonderful.
Thank you so much. I enjoyed that.